Now, the world's fifth largest dairy company reported improved earnings figures for the third quarter today. Fonterra announced total group normalised earnings before interest and tax for the 9 months to April 30th is at 815 million. That is an increase of 301 million year on year, which should be celebrated. However, economic downturn and uncertainty is keeping their forecasted milk price conservative at $5.40 to $6.90, quite a wide range. The Analyst is saying is of course quite wide. Rabobank predicted though $5.60 a month ago, and I do remember got some flack for it. Joining us now is Senior Analyst from Rabobank from across the ditch, Michael Harvey. So Michael,
hello, thanks for having me again.
No worries, there'll be no surprises there then for you.
Oh, it's not, and it's certainly something we're looking at from a global perspective and seeing some various fundamentals still at play, and certainly more and more signals going to farmers all around the world that milk prices are going to fall if you're selling your milk into an export market. So yeah, not surprising news. I mean, we'd love to be wrong and love to be talking about an increase in milk price, but the global realities are, we've got some headwinds ahead.
Is it always? I mean, it's so wide though. It's very hard for budgeting.
It is. It's an early signal that it does give farmers a chance to prepare for a lower milk price. So that's one thing, but it is a wider range than what we saw last year. I think the Fonterra opening price last year had a range of about $1, and they'll finish in that range. So that's something to keep in mind. But look, when you're looking at the global scene, we've got food and beverage companies all around the world that are listed on stock exchanges, and they're going to their investors and their stock markets and saying we cannot provide forward guidance because of so much uncertainty in the global economy and the global market. So it's challenging for dairy companies at this time of the year trying to forecast forward, what the operating environment looks like and what that looks like from a farmgate milk price. So I can certainly sympathise with the challenges that Fonterra and other dairy companies have and why they've got a big range there.
There's a bit of a criticism here at home, Michael, around break-even point, and what that actually means is it can differ from who's got the right calculator effectively. What would you like to see as a sort of a normalised, is it even possible industry standard break-even that we can understand?
In terms of farmgate break-even price?
Yeah, I mean, because some of, obviously, but, before interest and tax, etc., and even paying yourself, with the cost of imports rising as well. Yeah,
it's a good question. Look, there's so many different production systems out there in dairy industries all around the world, including New Zealand. I mean, it's sitting on the fence, but at the end of the day, it's all about being globally competitive. And I think that's where most New Zealand dairy operators still sit. They are very, very low cost in terms of, by comparison to global peers. And that's still key. When you've got cycles and down cycles like we're looking at here in terms of the global market, New Zealand are a better place to be able to weather the storm because of their low cost production system. So I think that's still key, but it's hard to say there's a uniform production system that all farmers should adopt, apart from it being trying to be as low cost as you possibly can.
What about Fonterra's result? 300 million up on, in terms of improvement. This cost cutting, long term though, it's really affecting that value add strategy if there was one.
Yeah, look, they've obviously been on a journey to turn their business around, and that's, reducing debt, getting rid of some non-performing assets, those sorts of things. I mean, I looked at the results today and, it would have been pleasing for shareholders and cooperative members to see improvement in some of their platforms offshore, particularly the Australian market business, which has been challenging for their cooperative because of the operating environment here, but even, the China farms, on a slow turnaround. So they were still loss-making in some components, but they're heading in the right direction. So yeah, look, it's a journey for their cooperative, but I would have thought it's a pleasing result. But you also note that, they talked about, having a good first quarter this year in terms of their consumer business, but certainly flagged that there's some challenges ahead around that food service channel, which, is what we're expecting because of the government shutdowns in all markets around the world. Sales of dairy products through that key channel are just being impacted materially, and that's the challenge ahead for a lot of dairy companies at the moment.
What's your prediction around a dividend as no decision has yet been made?
Oh, look, I hope probably not in the position to make comment on that. I mean, we focus our attention on the milk price, and we're still got a $5.60 a kilogram milk price, but we'll go through the process of updating our global models and our forecast commodity prices and farmgate prices in mid-June. Hopefully, we get to move it a little bit higher, but again, we're still looking at some pretty bearish fundamentals, not just in the next 3 months, but right through to the end of the year, and that can obviously impact the production seasons in this part of the world, unfortunately.
What's happening in Europe, particularly around protectionism of their own products?
Yeah, look, and that's where there's been a little bit of movement in the last 2 weeks around the tone of the dairy markets in the Northern Hemisphere. There's been a little bit of government intervention, and you're right, the European Union has introduced a private storage aid scheme where they'll subsidise some dairy companies to store surplus product for a period of time, which has provided a bit of support for their product pricing, which is why we've seen a bit of a rally in prices in that market in the last couple of weeks. Similarly, in the US, there's been a big support package put to food and agricultural industries, and dairy included, and a big portion of that is a sizable source of funding to buy a lot of surplus product and donate to the needy in social food programs in their local markets. So those developments are quite fresh, and they've certainly had a positive impact on the short-term tone of the dairy markets in those markets. But they are only short-term. In the numbers we run, they're certainly not going to fix the imbalances in those markets. So that's the challenge ahead for those markets as well. We're going to need to see supply slow, exports increase before we get back to balance.
For those of you who are watching, Michael, you can't see this, but you've become this very pixelated, retro 1970s type artwork across the screen. Joel, would you mind putting a lovely picture of Michael up there, because he's got such a gorgeous face? Oh, there he goes. He's come back. Oh,
there you go.
This is the joys, of course, and we'll get there. China. That's actually a question. Yep. You can just say that now with a question mark.
Yeah. Look, it's an important dairy market. Very important dairy market, very important to New Zealand, and certainly the recovery is underway in China. But it's a great example to look at what an economy will look like as it comes out of shutdown. And that's why, particularly in that food service channel, we're using China as a great bellwether for what might happen in Europe and the US as those economies are eased in terms of restrictions. And the simple reality is here, it's going to be a long road to recovery. Some of the food service markets in China are talking about a 6 to 9 month recovery before they get back to pre-COVID levels. So we're using that as a guide as to, is it going to be that sort of a long road ahead for the Northern Hemisphere as they unwind restrictions in those markets?
I'd like to ask you, in comparison, with the Australian dairy industry and how that's faring. Yeah,
look, it's in as good a position it's been as it has been for the last couple of years. I mean, we certainly haven't declared drought over in some regions, but certainly where a big chunk of the milk production takes place here in Australia, there's been really good rainfall to start the year. We had a good autumn break, some follow-up rain, and that goes such a long way to obviously, lifting your homegrown feed reserves and bringing down your costs, which have been so high for producers. So, we're telling farmers here in Australia to expect a lower milk price if you're selling into the export market, and that hasn't gone down well either. But they're certainly at least in a better position where they're going to have much more favourable seasonal conditions. So that should translate into an ongoing recovery in milk production, which has been so problematic for the industry over the last 2 years.
Thank you so much for taking the time to join us. Always love your great commentary. The senior analyst from Rabobank there, Michael Harvey.
This is Sarah's Country.